Breaking news. Beijing's rejection of Putin's price hike has put Russia and China on a collision course. After Vladimir Putin's key ally and trading partner, China, rejected a price hike, Russia's state energy holding company, Inter-RAO, began limiting electricity supplies to China. Russia is attempting to offset the slump in its currency, which has hurt export revenues, while China is experiencing severe electricity problems due to droughts and limits on increasing domestic coal production, hence the dispute. One expert told Newsweek that China is in a strong bargaining position and is taking a hard-nosed approach to negotiations with Russia over Russia's demand. After Putin's full-scale invasion of Ukraine, the West imposed sanctions on Russia, prompting Moscow to seek out new trading partners, categorizing them as friendly or non-friendly. Putin defended this new international order and bragged about Moscow's close ties with Beijing during Xi Jinping's March visit to Russia. According to TASS, the Russian state news agency, in 2022, Russia exported a record 4.7 billion kilowatt-hours of electricity, the majority of which went to China rather than the Moscow-led Eurasian Economic Union of other former Soviet states. New export duties went into effect on October 1, prompting Inter-RAO to announce a 7% increase in electricity prices for customers in China, Mongolia, Azerbaijan, and the secessionist Georgian region of South Ossetia. In September, Moscow announced that export duties on certain goods would increase by 4 to 7% based on the ruble exchange rate if the ruble was less than 80 to the US dollar. The exchange rate for the Russian ruble on Tuesday was 99 US dollars. Some Russian exports, including oil and gas, were exempt from the new tariffs. Inter-RAO representative Alexandra Panina reportedly warned reporters in August that the company could completely cut off electricity supplies if the price was rejected. This was reported by the Russian business newspaper Kommersant. A representative for Inter-RAO told Reuters, "Talks with China are continuing. We are instituting some quotas as of today. When Russia raised prices, Mongolia didn't balk." Thomas O'Donnell, a geopolitical analyst and energy expert based in Berlin and a global fellow at the Wilson Center, has said, "Chinese energy firms and the state have always been famously hard-nosed and very patient in energy negotiations with Russia." After Putin's fiasco of losing the European market due to sanctions, he said, "China has reaped great benefits for squeezing Russia when in a bind to export oil and gas," he told Newsweek. Beijing got advantageous prices for piped gas and cheaper oil. According to O'Donnell, a 7% export tax means that the Russian state power export monopoly loses money, or at least makes very little. Therefore, it must ask China and other customers for higher rates. According to him, China's reluctance to pay higher prices for Russian electricity imports suggests that, given the power sector crisis in China, it may aggressively turn to LNG gas imports for generation. In contrast to last winter, when COVID lockouts were still in effect, it resold LNG deliveries, which benefited Europe greatly. He remarked that this development could alter Europe's wintertime fortunes in acquiring enough natural gas from sources other than Russia.